Good day, fellow investors. Welcome to the stock market news with a long-term fundamental twist, where we look for the things that really matter. And in today's video, we're going to discuss SAP's stock decline, the decline in the outlook that crashed the stock, and why I think that will have enormous repercussions on the market, on businesses, on earnings. But let's start with the stock market decline, then we'll discuss SAP stock decline, give a business overview and the importance of SAP with 444,000 customers, business customers, and why their guidance is therefore important. See what is valued, what's the valuations of SAP, the expectations, and that's the same for the market in this market. And then we'll close with the investing outlook based on the data we discussed. COVID discussion, of course, we can't avoid it. Over the last 5 days, as I'm filming this early Friday morning before the market opens, even in Europe, 4% down over 5 days, a little bit better on Thursday, 1% up. So a lot of videos about crashes there, but I think there is something more important to always understand and weigh when it comes to investing in stocks these days. Thursday bounce was due to a great rebound in quarterly GDP, 33%, but we are still down 33% down, 5% down, we are still down about 10%. So the economy hasn't really rebounded into positive territory yet, and this is also where SAP's business results come in very handy to take a look at. However, also everybody's promising big package of stimulus after the election by the current president. If he wins, he will do that, probably also others. Everybody is very high on stimulus, or how we called it, stimulust. But this is also, okay, we had the run-up from March till the beginning of September, then down, then again up, and now we are again down, especially going into earnings the last days. So what's going on with the market? Fortunately, over the year, why I'm saying fortunately, because with what's going on, if this would be up 15–20%, then I don't know, then that would be really crazy. But year-to-date change with a crash is at 2%, should have been in a normal situation 50% down, but okay, not too exuberant from this perspective. We had the run-up from March, then a down, probably profit taking, then again up, and now we are going again down. And it's always good to look, okay, what's going on next? What will be the situation next? And this is something very important to understand. Many criticized Buffett for not buying stocks during the March crash. And then also Seth Klarman came out and said that we have to understand that the stock market predicts the economy later. The reflections and the repercussions of the crisis are seen 6 months, 12 months, 2 years after the hit came. So 2009 financial crisis, 2012 Europe almost went bankrupt on the Greek crisis, etc., etc. And in the meantime, 4 or 5 years, there was a lot of stressed debt and things like that. So you have the market that went up and down, down and up, and then you have the economies when really the situation, the 10% decline in economic activity is seen, and that's also seen through SAP's estimations, and that's why it's very important to look at this. Most comments were, is SAP a buy now that it dropped? We'll address that too, but the most important thing here are the earnings, the business earnings and the outlook, because it gives you a good perspective on what's going to happen next over the 1–2 years ahead. And it's not going to be nice no matter the stimulus. You cannot stimulate people to buy more, to invest. So the money goes into financial assets, but it doesn't really trickle into the economy, which, when this COVID situation passes, might be the real issue that we're going to think about in 2021, 2022, and beyond. As I said, stimulus is immediate. Everybody's trying to stimulate everything, push as much money as possible. There is no inflation, so printing of money is free. Let's do that wherever we can. However, it doesn't really trickle into the market. And we see this SAP stock down 23% on Monday, then another 5-6% up till Thursday, then flat on Thursday. But this is a huge crash for a stock like SAP that did extremely well over the last years. Of course, if we look at the long term, the stock is where it was now, is where it was in March, and where it was in 2019 and the peak of 2018 September, so where it was 2 years ago. If we look from a historical perspective, it's still up very, very significantly. However, this is a growth stock. We'll discuss that in the valuations, and when the growth is not as expected, the stock crashes, and the growth not as expected is very important for economics. Let's take a look at what SAP is, and then we'll discuss the impact it has on the market and the importance of these earnings.
What is SAP? SAP is the market leader in enterprise application software, helping companies of all sizes and in all industries run at their best. 77% of the world's transaction revenue touches an SAP system. Founded in 1972, the company pioneered enterprise resource planning software, known as ERP, setting the global standard on how to manage operations and helping organizations do more with less. Since then, we've grown from a small 5-person startup to a multinational enterprise, with more than 100,000 employees and over 440,000 customers in 180 countries.
So 440,000 clients, mostly business clients. I could use their system to find things in my wife's kitchen, but it's mostly business clients. And when the outlook for business clients is not positive, is stagnating, then it means that the whole economy, the whole businesses are not interacting with SAP, are not investing, which means that the economy will not rebound over the next 6 months as everybody is expecting, that the stimulus will not trickle down to businesses, that there will be a lot of debt left, so those will be the concerns over the next years. And that is something extremely important we have to watch for. If you feel you're getting value from this and if you enjoy these videos, please click that like button because it's very important, they tell me, for the YouTube algorithm. If you look at what was the outlook from 2019, total revenue was 27 billion euro. The outlook was for growth of 6 to 8% per year to 29 billion euros in 2020. This was what was priced in the growth stock, with the ambition of 2023 to grow to more than 35 billion euros of revenue. Of course, this didn't happen. The revenue remained flat, also down. They don't know if it will be up or down. Free cash flow was good at 4 billion, but still it turned from a growth stock to a no-growth stock, which impacts valuation. This is the new strategic update. So what they are forecasting, this is their assumption now: lower growth in cloud revenue, lower spending by businesses, but they hope that from 2023 this will change because of their strategies. So when this happens, this will again become a growth stock, but this is uncertain. We don't know whether it will be the white line, will declining slower growth, or this will really turn into faster growth later as companies switch. However, the new ambition is not 2023, but now is 2025. So 2 years of business and economics lost. And if you see here, total revenue growth 4.5% per annum, not 6 to 8%. Now the target is 2025, and perhaps this is the most important thing. Muted growth over the next 1, 2, 3 years, and this is big. Muted economic growth. This is the news you want to watch. So this is very big. I think, as Munger always says, he doesn't read the news, he looks at businesses, what businesses are doing, and that's the best way to understand what's going on in the economy, in the world, and how to think, how to position yourself investing wise, and when to take advantage of the opportunities there. From what SAP is saying, we'll look at stagnating economic outlooks, perhaps even declining over the next year or two, and the stimulus will not trickle down to that because everybody will have lots of debt in 2021, so the outlook might be even worse than what SAP is projecting. But let's discuss the valuation, what's priced in and what's the risk of the market and SAP. So revenue, the company more than doubled revenue, so a growth stock over the last 10 years. Gross margin was very high and stable. High gross margin, stable margins means on growth in revenue that it is a good business. Net income almost tripled, also dividend growth, huge dividend growth, constant dividend growth. Who doesn't like dividend growth? Number of shares stable, so they buy back what they issue in compensation, that's good. Free cash flow higher, doubled, 2.56 billion euros, 3 billion, going to 4.5 billion recently. But still, this does not include something very important, which is acquisitions. If you look at SAP acquisitions through their history, you can see that they are really acquiring a lot. 8 billion spent for Qualtrics in 2018, then 2.4 billion for Calidus Software, then they do other acquisitions, no prices here. Let me find something else. 8.3 billion for Concur. I'm already at 18 billion. And then there were other acquisitions in the past. 4.3 billion for Ariba, 3.4 for SuccessFactors, etc., etc. 5.8 billion for Sybase. So when I look at this, okay, they did grow revenues. They did double revenues, but they also spent 25 or more billions for acquisitions, which means that they need to do those expensive acquisitions to grow, which actually, if that is not included in the cost of capital but considered as goodwill as equity and not depreciated, then the actual returns on investments are not as one expects or sees from upfront looking, because they need to do those acquisitions. They will have to do more of those acquisitions, and that is big money. That's a quarter of the current market cap. That's the market cap of 5-7 years ago when the stock was much lower. So that really leads me to believe, is this such a beautiful business, or it's a highly competitive business where you always have to be ahead of the competition to stay alive? That costs a lot, and therefore there is the risk perhaps that the market, part of the market perceives, but others don't. So net income, okay, this is what they do, but really what we have to look at is what are the distributions to investors, and this is what they can get really as free cash flow with it, which is in this case what 1/3 of what they really make, or half depending on the year. And now without the growth, okay, the market cap has crashed, but it's still at 115 billion euros. That's a price earnings ratio of 23 for a dividend of 1.68%. So okay, but given the slow growth ahead, given the competition ahead, I don't know whether this is expensive or not. So we have no growth, and this is uncertain. This also gives time to the competition to grow. So that's the risk, and this is probably why the market crashed. I'm not interested in SAP, I will not follow it, but I really wanted to check it, not because of the opportunity in the stock, but because of the economic repercussions of what they just published. So the market, as said, is pricing in a dividend yield, no growth for a while, and it's a timing thing. We have competitors, we have everything. And then you have to see how this fits your portfolio and compare it to other growth stocks, stocks that are continuing to grow, that have similar valuations. So I don't know what will happen with SAP, but compare it to other opportunities and then see whether this is the best opportunity to fit in your portfolio now. Stimulus is coming, and thinking of reality, this is reality, a positive reality from a big company forecast. And then on COVID, Everybody's waiting for a vaccine. I see all these mutations in the virus, so there is no vaccine for the common cold. Who knows whether the vaccine will be there, will be efficient, what will happen with the virus? Nobody knows what is the outlook. And then the stimulus, what will be the effect and repercussions of the stimulus? This is uncharted territory. Again, nobody knows. We know from SAP now that the outlook is not that good from a business perspective, and that's something we have to think about when it comes to investing and portfolio positioning. If you have gotten value from this video, please click that like button. It means a lot for the YouTube algorithm.